What should the property industry make of the hung parliament this morning?
Well, obviously events are unfolding at the present time and it's very difficult to gauge quite what the outcome will be. Nevertheless, what does seem quite clear is that we are in for a period where there's going to be considerable horse trading. A lot of uncertainty will inevitably prevail over the coming months, and that will make it a bit more challenging for the property industry. I think like any market, clarity is good, and one thing that's come out of this election is a lack of clarity.
How important do you think having a stable government in place will be to the property industry then?
Well, having a strong and stable government would clearly be, I think, welcomed by the property industry. Nevertheless, I think it's important that we don't get too fixated with the politics and ignore some of the wider macro influences on the property market. It's interesting, for example, that the commercial real estate market has been maintaining its more positive stance. We've seen a bit more activity, pricing continuing to edge upwards in the face of the general election campaign. It hasn't ground to a halt as the political debate has taken centre stage. Now, we know that the market is still, in relative terms, way down in terms of activity and pricing on where it was, but the recovery that we are seeing has continued. And it's also fair to say, very interestingly, that sentiment in the construction sector, as highlighted in the latest SIP surveys, have also turned more positive in recent months, again against a background of political uncertainty. So let's not get too fixated with the politics. A decisive outcome would have been good news for the property sector, but notwithstanding that, some of the other broader macro trends, which are consistent with an economic recovery in the UK, are helping to underpin a slightly more favourable picture. And I think that will continue to be a feature of the marketplace over the next few months.
Obviously, the money markets have had some time to absorb the news from this morning. What's your assessment of how they've responded?
Well, certainly financial markets have paid some attention to this, and they are not entirely happy with a lack of clarity. But there's no doubt that the overwhelming influence on financial markets this morning, as it was the case yesterday, is really the unfolding story in Greece, the risk of contagion elsewhere, and there's certainly a risk that, with investors being a lot more concerned about spillover effects, that some of the increase in risk appetite that was evident in investor behaviour until fairly recently, coming back into the marketplace, may again dissipate. And that is bad news for property, because the property sector is very much built around debt. It's a leverage-driven industry, and if investors aren't willing to invest, if banks are again turning even more cautious on lending as a result of this huge uncertainty emanating from Greece, then that could have ramifications for how the property market performs. In some respects, I would say that's a bigger issue for the property industry than what happens in terms of the outcome of this election.
Simon Rubinsohn, thank you very much.
Thank you.